If you don't fit into the traditional mortgage lending box, there still may be options for you. Some lenders offer non-QM products that vary in the way that income and assets are documented. QM stands for qualified mortgage, and it basically refers to any type of traditional loan like conventional, FHA, VA, or even USDA. While a qualified mortgage is going to require you to document income and assets with the traditional methods such as pay stubs, W-2s, tax returns, and bank statements, a non-QM product will offer some variations to this. For example, there's a bank statement loan where you provide 12 to 24 months of your bank statements. The income is then calculated by taking the average of all your deposits over that period of time. They will exclude any deposits that look like they're out of the ordinary, and any single deposit that is in excess of 50% of the monthly average would have to be sourced and documented. There's even a stated income loan product available now. This basically means you just state your income on the application and no verification of income is performed at all. There's also what's known as DSCR loans. DSCR stands for Debt Service Coverage Ratio. This is essentially a loan where you can purchase an investment or rental property, and as long as the rental income is projected to be anywhere between 100 and 120% of the total housing obligation, which is going to include principal and interest, taxes, insurance, and any mandatory HOA dues, as long as your rental income offsets the total housing obligation, then we don't have to document any additional income. Or perhaps you're looking at a property that doesn't qualify for traditional financing, such as a non-warrantable condo. There's also non-QM products available to finance this property type. While non-QM products don't necessarily require a perfect credit score, they are going to require you to put a little bit more down payment. They're higher risk loans, so you should also be prepared for the interest rate to be anywhere between 0.5 point and 2% higher than what you could get with the traditional mortgage financing. But even paying the higher rate, it still makes a ton more sense than renting. So if you feel like you fall into this category and don't really qualify under the traditional guidelines, then reach out. Let's talk about what we can do for you on a non-QM product.